Hello, hello. Is everybody out there? Let's hope that we are connected live. I think we're live. Yeah, we're live. Oh, oh. Okay, let me just get set up at my end. Out there. You're gonna get set up. Live. I think the audio's good too. To be truthful, the YouTube is not very good at synchronizing or testing your capability to go live. It's really bad. Anyways, I have no idea what's going on in my system. Anyways, let's hope that we are good to go. I think we are. Okay. So, let me just pull up my screen here. Alrighty. So here we go. So I'm going to take you into my VS Code first. I want to show you what I'm currently working on with all the fun stats and stuff. So right now, what we've got here is I'm back testing now, all of my bots going all the way to the beginning of April. So we're now going back approximately 2 months. And as it says right now, what's going on is the bots total is 2,700, uh, 2,700 bots created. Only 7% are profitable. Okay, so that's to show you only 7% are obviously profitable. Let me know if you guys can hear me. I have gone through all the audio checks and they should be working. All right, so knowing that, that's the likelihood of how profitable or how to find profitable bots around 7%. Very important stat I want to show. Now, the other one that I want to show here is all the bots that are profitable. So you're looking at about a couple hundred bots that are profitable. We'll get into the Gen 7. Hey, Mr. Quant Labs, how are you? Thank you for joining. Um, so right now, the most profitable bots, this is all speculative with AI because this is just early treatment on the coding. There's a lot of debugging in here, but what I'm essentially looking for is this year's worth of bots that have positive um, monthly returns. Okay. Because of the volatility, what we're looking for is pretty well positive momentum in the markets for these bots. One thing I thought of is that these bots that I'm working on are for the time frame of when they ran and on those particular contracts. So I have to go in, reassess all the 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 market data that gets downloaded for the core trading rules. But generally, I'm looking for these months that are positive, and because of volatility, that's hard to find. Sometimes what I also will look for is any bots that have had 3 months running of profits. So this is a pretty good bot here. This is a ZL. So it's a ZL WTI crack spread trade arbitrage. Some of these could be futures, some of them could be a combination of futures and options, as I said last week. Okay. So that's generally what I'm looking for. There are, well, right now, 1,500 have been ranked, and you know, we're all obviously going to focus on probably the first 5, 10 that are the most profitable. So that's the sort of thing I'm looking for. Okay. Just so people know that. All right. So I'm gonna end that talk a little there. So let's talk about what I want to really stress here. So in my wares and trinkets that I sell, um, I sell this course. It's a 26-day drip fed course. It goes through all the institutional type of things to look for from a fundamental point of view. You can see here all the different topics like advanced uh, future concepts, options, uh, basically what all the trading institutions do. Okay. And I've created this about 2 years ago. This is very, very fundamental, very important to understand. Anyone that asks me, how do you get into trading? How do you get into algo trading, blah, 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 I would probably point them to this kind of course. Okay. It doesn't have to be mine, but from what I'm running against IO, this course is the most deep, deep analysis of its kind. Okay. Because it's built off of a UC Davis course out of California. And it's basically with the AI applied, and you'll see in here some of the coding samples in variety of language of JavaScript, C++, Python in there as well. So that's important to know, obviously. Let me just check on the chat here to see how we're doing. Okay. All right. So that's an important course. Okay. Now, just so you know, this course is going to go up to right now. I think it's selling for 250. This course will just move up to $3,500. As I said, I've done a marketing blah 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 analysis. It should be minimum price at 3,500. So that's going to happen. Now, what comes out of this? Out of this comes essentially. Let me just pull up my what we're going to talk about here. Where's my events right here? And out of that, when I did the analysis, over 400 trading rules were extracted from it. So I have a PDF now, 400 trading rules. Okay, and these are 400 trading rules that institutions will use to keep their models, algorithms, strategies, bots, whatever you want to call them, in line with however they apply those uh, markets, okay, or those strategies. So in my case, I have over 400 of them. Okay. Now, if you watch my latest videos, if you want the quick version, I'll put this in the uh, the chats. Now I can do that because I figured it all out because I'm so smart. I have a Substack account, so I'm just posting those into the both streams. Okay, I'm going to try to keep these streams running. Ba, 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 ba. Yeah, here. Yeah, so there you go. I just posted in this the Substack account. In there, I just posted these today. So the first one goes over about just the general concept of these videos of the 400 trading rules, the type of trading rules, why they're used, and how they can help either both customize, build out proprietary uh, trading strategies, bots that the institutions would use. So this is where you can customize and make them more proprietary based. Um, and the other video is posted in here as well. This one. Okay, so let's go through some of the benefits of this. Okay, so there back when I did this test, there's about 200 plus bots that I ran it against. Everything that was listed was mostly energy, oil, gas, and natural gas. So those were the top performing bots. Okay. Out of that, and then there's also micro Bitcoin. So if you go to my YouTube channel, okay, I put up two long form videos. Thought more people would watch it, but nonetheless, whatever. Just proves what I'm thinking. And you guys can hear me okay. Let me know. Okay, so these two long form videos were posted on Friday. Okay, this one is over an hour long. Kind of goes through great detail what I'm talking about. This video basically shows results of this analysis with these 400 trading rules. So basically, this is what happened. Um, we're able to, on average, cut down or up to 50% downside risk. So if you are running a bot back tested over a year and you have some trading bots that look good, but are having, let's say, 15% maximum drawdown. Some of these, the process can help reduce that drawdown by up to 50%. On top of that, you're able to sometimes, not always, but you're able to double the profit potential just from doing this stuff. If you watch either video, there's a couple examples of that, um, of natural gas and oil. Okay, so if you watch those, you'll know what I mean. Um, and right now, as I said, I've got nearly 3,000 bots going back 2 months. So I'm able to see which ones are profitable, rank those, and then test those, and then try to get them running against a live uh, account and using real live money. I've been at this for 10 days against live accounts with money, and I've only had one simulated order out of the whole, I don't know, running it for 10 days. So nothing's hitting. And the reason is when you analyze the data and what market asset or what instruments are to be traded, a lot of them are not tradable because you miss out on the timing. So, for instance, let me see if I can pull up my trading view here. Um, yeah, because I think there's a chart that we should all know. Like today's what, June 9th. Okay. You know what? I better not load up my trading view. But if let me see if I could do it with finance Yahoo. Okay. So if I pull up all the charts, so I'm gonna do just focus on futures, okay? As you know, I'm not a big fan of doing single stock because of the way the stock market is, and I'll actually show you that in a minute. Um, so if I was to load up oil, let's see if this works. I think my system lags when I'm watching videos. So let's say I want to look at oil. Yeah, it's not. Yeah, this is lagging pretty bad. But I'll just say, out of all the things in the last 3 months, oil CL is the one that uh, trades the best. Over the last week or so, shorting Bitcoin was the most profitable out there. If you were shorting Bitcoin when everyone's complaining about how has declined, if you were shorting it, you would have made a fortune. Okay. CL from the long only is the only one kind of performing right now compared to gold. Obviously, compared to any of the major indices like the S&P or Nasdaq. Um, Gold, as I said, is not doing great. USD or dollar index, the DX is it's not bad. It's a really tough set of trading conditions right now. Okay. If you got questions along the way, let me know. All right. So there is that problem. So let's go back to what we're talking about here. So this is basically make sure I'm delivering what I promised. Okay. So I've given you the Substack links. Close that. And essentially what we're talking about under here, show more. So basically what we're dealing with here is pretty important. Oh, there we go. Okay, so you can increase your Sharpe ratio quite a bit. On average, you can bump it up maybe 5-10%, which is quite a big deal. Your profit factor can jump up as well. You go from on average to say 2 to 3, or sorry, 2 to 2.5, on average. Um, that's the big benefit. You can also increase your win ratio quite a bit as well, because remember, you're generating your your current trading bots on the first generation. You apply those 400 rules with AI, and then you can pretty well change the behavior of your bot, and it will improve on when you run the back test as well. Okay, So as I said here, some examples here: crude oil, specific one, this backwardation calendar spread went from 90K to 200K profit potential. The micro Bitcoin arbitrage, and again, that's a short. So that's a short with CME against the Binance is the popular one as an arbitrage. So you get a 17% bump there. Natural gas calendar, 14,000 to 68,000. That was the big improvement there. Gold as well. And kind of examples of what it does, it will reduce gamma exposure by 40%. It just, the AI, when you run it against with these rules, it will do all kinds of things. They'll say, here's the problem, and this is how we're going to improve it. So these are some of the rules that would be applied. So, for instance, improving position sizing using Kelly criterion and fractional Kelly. You have volatility scaling, where it's VIX triggered, and position adjustment. You could also improve the dynamic hedging protocol with a variety of real-time Greeks that are built into the new uh, strategy. It also will build out internal breakers for circuit breakers and drawdown controls. And if you would trade options, it'll improve the specific rules on options. And again, like I said, it's not for stock options. Um, so there's some advantages here with the tax. Um, Sometimes I won't say it's 24-hour access. You're going to get 23-hour access with the CME as an example, minus 1 hour each day, 5 days a week. I'm not sure if they're going to go 7 days a week, but I hear there's talk of it. You want to focus on the higher liquid instruments like ES, which is S&P 500, oil, CL, GC, which is gold, and then ZN, which is your treasury. And then the important one here is to be able to build in fixed trading or using implied volatility for future volatile calls, and along with open interest as well, and Greeks to help reduce your volatility outlook. And again, you're able to gauge and predict the institutional flow of what, as I said, the institutions are doing, and this is can be done through a variety of option chains. I mentioned that last week. And then one of the other things I've done is, as I said last week, I'm segregating out the micro strategies, sorry, the micro futures, and then there's the blend of that for beginners like myself starting out, and then it can go into really full on contracts and options, which could probably, if you were to deploy everything, like a $250,000 allocation. Um, and then and you can apply all these sort of things as well. So if you have an account size of 10,000 with a broker, obviously that's going to be limiting you quite a bit with the micro futures. But if you add in the options of full contract sizes, yeah, I mean it can be built out for 250, and the more you have here, and adding options, you're able to add in new trading bot opportunities. So you can actually improve your trading strategy, number of strategies you create by about 50% from what I'm seeing. And because we're doing option chain analysis, there's that institutional edge. That's really important as well, because it's the institutional edge that will keep you ahead of everybody else. And that's through the option chain analysis. And here you want to read things like implied volatility skew. And I mentioned this before with the news that I'm able to download and analyze. Uh, that's including institutional positioning. That's really important. And you can even break it down, as I said, by what institutions or market participants and what they're doing and how many calls they're making and the options and so on and so forth. Again, open interest is a big one at the different key strike prices. So you can do that. And there's the Greeks as well. with a delta, gamma, theta, vega. And then the other big thing you want to watch for is the put call ratios, which is your sentiment indicator. And again, this is not retail because usually retail is not analyzing the markets like this. They're kind of like trading based upon what the smart money does, and what we're looking at here is what the money is doing. Okay. And then we also have looking at analyzing institutional flow before the price actually moves. Okay, because I have seen strategies where it does calculate that, and being able to look at that is really important, obviously. Now, the pricing on the stuff that I'm talking about for the kind of reports, if you're a real serious trader from a retail perspective, this is all from an AI. Okay, this is using Gemini. So $300 to $800 for the daily option analysis. If I wanted to start targeting CTAs or algo traders, that would run you about 1,000 to 2,500 per month. Okay, and then the prop firms is more the institutional as well. You're looking at 3 to K. That's how valuable this information is. Okay, um, so very important to know that. Again, this is all with the disclaimers that I'm talking about here as well. Um, so this kind of matters because when you look at the markets with Bitcoin, along with all the other ones being the market indices, S&P 500, Nasdaq, Russell, VIX, gold, oil, and so on. Um, it's kind of important to know all this fun stuff. Okay, that's all I can say. Um, Anyways, I don't want to say too much, but you could see this just happened on Friday. Okay, so when you see volatility being very steep, of a drop of 3%, Nasdaq was down 4.2%. VIX was spiking. The markets tanked again today, but yesterday they did kind of rally, all driven because of geopolitical tension, with the tail risks that come along with it. And then what you're looking for is the correlation among the different equities as well, because basically the classic momentum trade on the stock market, that's where the diversification is needed. Even though it's failing, that's where you got to start adding in the options. All right. So Aaron Adams, let me just get over to my other question. Hello, Aaron Adams. I appreciate your videos. You got a great product you made. Looking to get started with you next week. Oh, okay, great. Thank you. Just so you know, I'll have a big sale trying to get people in my quant analytics probably in the next week or two. As I said, what's going to happen is let me just take you over to the pricing here. I know, let me just see here. So if you come under my plans here, I've got basically I've positioned everything as it stands right here. Where is my man? My system's really slow. It's because I'm streaming. Um, okay. Is this moving over? Okay. Let me just see here. Yeah. So, yeah, let's see here. Okay. Pricing plan. Here it comes. Boom. I can't believe my system's so slow these days. Um, yeah, here we go. It's uploading. Yay. Okay, so basically what I got right now is this quant analytics service. So I could show you some PDF reports if you want to see them. This is the more institutional level. So that's what I'm saying, the price of a car. This will go up to over time, the end target's trying to go up to at least 300 per month for base like what I have. I can show you more stuff if you are interested. Just let me know and I'll gladly pull up some sample reports that you could take a look at that will be added to this. And that's why it's going up because of the outlook of with the options. All right. So let's see here. So Brendan says six standard deviation move on Nasdaq on Friday. Yeah, I don't know if you follow. I'm sure Brandon, you know this. Anything over a move of standard deviation of two is pretty extreme. When you're moving into, I didn't know it was six standard deviation. That's pretty, like that's more than extreme. That's an anomaly actually. But to be honest, I think a lot of it's just due with this Anthropic IPO and the SpaceX IPO. Like that's basically saying in the market long term they could get up to 1.2, 1.5 trillion, maybe. But not when they issue it. And now I don't know if you got saw the news bit about OpenAI's getting into the game because they know there's going to be a massive meltdown. So they're trying to get the wealth created now for themselves because the IPO is game and all this AI stuff is coming to an end. Have you guys got any other questions as well? Let me know if you got any other questions. I'm just waiting for anyone that. Oh, more questions. Thank you, Brandon. Universities will tell you markets are efficient and follow a normal distribution. Yeah, that's because they're all out of dates. Typical university. I have to be careful being on YouTube. You know it's manipulated. What they put out. It's there's not a lot of truth to it, and so on and so forth. I could say some other stuff as well, but I won't. But yeah, there's a lot of manipulation going on for sure. So obviously, same in the markets. It's the same thing with this modern portfolio theory, meaning, oh, debt doesn't, national debt doesn't matter, and so on. So yeah. So if you guys got any further questions, let me know. That's why we're here doing this stuff. But I just want, if you want to see some reports, I can show them to you and kind of set up for it. I don't know if my thing is melting down here. Can you guys hear me okay? Oh man. Yeah, it looks like my computer's about to crash.
Market data connection lost.
Hello, everybody. There's a new
Market
stream.
data connection re-established.
Oof. Okay. I got a third stream here. I don't know. This is ridiculous. Can you guys hear me still? Okay. So hopefully people will join this new stream.